Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created this channel to help as many people as possible become independent and profitable traders. So, if that's something that you've been looking for, welcome or welcome back to my channel. I have so many different types of videos covering a lot of topics that are good for beginners or anyone who's trying to become a better trader overall. Now, I do tend to focus on Forex pairs and also gold on my channel. However, you can apply these charting techniques to almost any market. And as long as you are patient, you will increase your chances to be profitable. Now, in today's quick video, I'm going to be showing you guys the difference between day trading and position trading. Now, while we are analyzing the same market, the time frames that we analyze and see our profit are going to be a little bit different depending on which trading style you choose. Now, some people may say, if I can make money every single day, why would I want to wait weeks or months to take profit? Well, that's a question we could ask stock traders or people who tend to stay in positions for years. That is why this is called position trading. It's all about setting yourself up for the right entry and then having the patience to let that trade play out. Now, the only difference is going to be the time frame and the amount of time that you're in your trades, but the analysis is going to be the same. The assets that you trade can be the same. It's just a matter of how long are you willing to wait in order to make your profit. Now, one thing I like about trading is the longer you stay in your trade and the more the trend continues, the further and further you can push yourself into profit. But it's not about getting greedy. It's about being able to identify these significant key levels so that you can know when you should expect to get in and out of your trades. So I'm just going to go ahead and put the chart in replay mode, and we are going to select a bar and do an analysis on the weekly time frame. So similar to how I do all of my analysis, if we were to start on the week, the first thing that we need to understand is that each of these candles are taking a week to form. So for from one day, from one Monday to the next Monday, that is going to encapsulate all of the action that has happened in that one candle. Now, the reason why this is important to highlight is because when we're setting our key levels, we should know that it could potentially take weeks for the market to get there because it took weeks for the market to reach where it currently is. So after checking the news, the next thing that we want to do is just identify some key levels. And the key levels are where we can see there was high activity in the market. This is important because if I highlight this area here, I can see that not only one, but two, three, for 4 weeks, almost a month, the market was rejecting off of this area before it actually sold. Now, if price is rejecting a certain zone for weeks, that makes it a strong area of resistance. And whenever the market gets into that resistance area again, we have the potential to sell. Now, because this has happened before, we know that if we're going to sell, we could potentially take profit here because this has happened before. The market sold at the same zone and it bought at the same zone. So that is what my first two horizontal lines are reflecting. Now you can add as many or as little of these lines on your chart as possible, but the point is just to target those previous highs and lows because if the market is going to sell, like we saw before, it has a high chance of going back to the same place, making this a great area for a potential TP. Now you're going to see that I've highlighted several different lows, and this is just because if the market is selling, we know that the whole goal is to create new lows versus if it's buying, it's going to be to create new highs. So we already have our market near an area of resistance. Now, the next thing I'm going to look for is simply a break of structure. And a break of structure is exactly what it sounds like. The market can be consolidating between two zones like this very clearly. But then eventually it'll say, I don't want to sell where I sold before. I actually want to break out and I want to continue to buy, which we can see will create a new high. So a break of structure helps us to determine which direction that the market is going to go, and then we can know which parameters we're going to follow. So in this case, the market was selling at the same area and buying at the same area. We had a little bit of consolidation for 3 weeks here, and we just really want to see which way it truly wants to go. Does it want to break above this 3 week structure and create a new high, or does it want to break below to create a new low? So let's go to the next candle, and we can see we're still getting that consolidation. No strong determining factor for if it's going to buy or sell. And we just really want to wait for that. So on the next candle, we do get a little bit of a break of structure. So if you felt confident, because not only do you have your rejection, you have this candle opening lower than the previous candle, and your break of structure, this would be a nice place to say, okay, I'm going to get in for a sell. I'm going to set my stop loss above that previous high because it should not be going that high. If it's selling, and I'm going to set my take profit at a previous low. Now, all we did was set some horizontal lines at previous highs and lows. Notice that the market was near an area of resistance. Wait for a break of structure on the week and set our parameters accordingly. So let's just go ahead and hit play and see what happens. And we can see that in about 1, 2, 3, 4, 5, 6, 7, 8 weeks or 2 months, our trade would have taken profit. Now, if you were in that trade and you were looking at it on the day-to-day basis, there would have been tons of buyings and sellings that have happened in between, but we were looking at the weekly time frame to actually trust where the market was going to go. And we can see in about 2 months, we could have secured about 500 pips. Now, let's just say you're using $2 per pip. That's about $1,000. And this may not seem like a lot of money, but it's not about how you made the money, but it's not about how much money you made, but it's about how you made the money. All you did was wait for some rectangles and lines to make a certain move. You click the button and profit was secured. Now, do you want to wait 60 days to potentially make $1,000, or do you want to make your profit every single day? Now, the only thing that you would change here is the time frame that you're analyzing. Again, because we started on the week, we see that it took a couple of weeks for this trade to play out. But if we were to start on something like the 15-minute time frame, and let's just go ahead and take these lines off our chart. If we were to start on the 15-minute time frame, we can see how we will be able to do a similar analysis. We will be able to secure some profit. However, we may be able to make money a little bit quicker. So let's just go ahead and put the chart in replay mode again, and we're going to follow the same process, this time on a smaller time frame. So the first style will be considered position trading. You can analyze your charts on the day, the week, or the month, but just be mindful that it will take longer to play out. Now here, I'm just highlighting my highs, and then I'm going to go ahead and highlight some potential lows that I can target if the market were to actually sell. And again, you can highlight as many of these as you can see, because as long as the market is going in that direction, there's a high chance that these levels will be hit. So we've identified our highs and lows, and we can see how we've had some consolidation here. So we need to have a break of structure above for buy, and we need to have the market break below this line if we're going to sell. And then we know that we would target this for a TP, and then we will also be targeting these areas for TPs as well. So let's just go ahead and hit play. And we're going to see what happens. Do we get that break of structure above or below? And which way should we go? Now, this is cool. It didn't take 3 weeks this time. It took 15 minutes for that break of structure to happen. If you don't feel confident and that's like a little too close for comfort, wait until the next candle. Cool. we get a strong break of structure, we're going to enter that trade for a sell. I'm going to set my stop loss above a previous high, and I'm going to set my TP at a previous low. Now remember, the market may or may not come all the way back down to your ultimate TP. So that's why it's nice to have multiples, TP1, TP2, TP3. But let's just go ahead and see what happens. Now we see that our first potential take profit was hit. Our second one was hit. Our third one, we see some consolidation here. Our third TP was hit, and we are just going to wait and see if ultimately our fourth TP is hit, making this a good 1-to-4 risk to reward ratio, meaning we risked about $2,000 in order to make 8K, and I would say that that was completely worth it. So let's just go ahead and see how long that would have taken, right? So versus waiting 60 days to secure 500 pips, do you see how in about 24 hours we could have secured 120 pips, which is a significant time difference and leap. Now, if you had entered this trade 3 times or even 4 times, you would could have made the same amount that you've made in 60 days just by choosing to day trade versus position trading. Now, I really hope that put things into perspective for you and to help you to understand the difference between being a position trader and being a day trader. Right now, we'll make more videos to explain the difference between being a scalper and being a day trader, being a scalper and being a position trader, because it's all up to you and how much time you have and how much patience you have when it comes to waiting for your trades to play out. But that's really all I have for you guys today. If you enjoyed this video and it made sense, just go ahead and let me know in the comments, what type of trader are you? Do you prefer to be in and out of the market with the bag, or do you not mind waiting for your trades to play out in the name of securing more pips? But that's really all I have for you guys today. Remember, you can register for my online course or personal mentorship if you're interested. That information is down below in the description box. But that's really all I have for you guys today. Until next time, rich friends.
Yeah.